Only small fish make a few $100 million in a day. Honestly, the guys we're about to talk here made over $1 billion in a single day of trading. Don't swipe or click away, because here are the 10 biggest stock market gains in history. Number 10. Michael Burry. We're going to start off with a smaller shark. Michael Burry left school and started a hedge fund. That hedge fund was Scion Capital. To say that he was very little known would be an understatement. He was a nobody in financial circles. A young, awkward, and introverted kid starts a hedge fund. Wall Street was not worried. Just another fish to gobble up when the time was right. But little did they know, this young kid would take $800 million from the biggest investment bubble in the history of the stock market. After he became famous for earning his investors all of that money, he said in an interview that the strategy he used to one-up Wall Street investors was based on strategies by Ben Graham in his security analysis book. He said, "All my stock picking is 1005 based on the concept of a margin of safety, or the astounding gain of $100 million for himself and $700 million for his investors in 2008. He was featured in the ultra-popular movie titled The Big Short, where he was portrayed by world-renowned actor Christian Bale. Number 9. Andy Krieger. Black Monday during the 1987 crash was not as gloomy as everyone made it out to be. Sure, the majority of investors were wiped out, but not Andy. Andy Krieger was an aggressive trader who, at the time, was working for Bankers Trust. While other investors were too busy betting the dollar would fall in value, Krieger realized that other currencies should be shorted instead of the dollar. After some searching, he found his target. The New Zealand dollar, or the Kiwi, as it was commonly known, was overvalued. Krieger saw this as an opportunity to short the stock. Basically, he said that the value of the Kiwi will go down in the coming months/years, and then bought up as much as $1 billion worth of the New Zealand dollar. Some say Bankers Trust controlled more New Zealand dollars than were in circulation. Soon enough, other investors rallied behind him, and the currency fell by 5%. The option was a success, and he sold. The profit? A measly $300 million for Bankers Trust in 1988 dollars. For the trade, he received $3 million, which Krieger took as an insult and left Bankers Trust to work for George Soros. Number 8. Jesse Livermore. Few investors are as successful and popular as Jesse Livermore. The man managed to smash that like button just like you should if you haven't done so already. But no, in all seriousness, Jesse managed to earn the unthinkable sum of $100 million in the stock market crash of 1929. But isn't that significantly less than Krieger's earnings? Not if you adjust for inflation. When you do that, $100 million turns into $1.73 billion. He shorted the Dow Jones, which was unthinkable at the time. But Jesse Livermore didn't share the enthusiasm about the stock market going up like other investors. He saw that the amount of money borrowed far exceeded the amount of money in circulation, and he realized that in the last 5 years, the Dow Jones went up 500%. Surely, this can't be natural growth, but pumped up enthusiasm. So he shorted and got $100 million in return. Number 7. Paul Tudor Jones. Using the insights from the 1929 crash, Paul Tudor Jones, one of the most successful stock traders of all time, managed to make $100 million in a single trade back in 1987. You see, he knew about Jesse Livermore, and as soon as he noticed a lot of greed in the market, he started analyzing every detail of the 1929 crash. Immediately, he and his partner Peter Borish noticed that the events that led to the 1929 crash were almost the same events that they saw in their own time. Just on October 5, 1987, just 2 weeks from the October 19th crash, Paul Tudor Jones bet against the market. This move cemented his legacy in the history of trading as one of the greatest of all time. Number 6. George Soros. We started with the big fish called the man who broke the Bank of England. George Soros was one of the greatest investors of all time. He is 92 years at the moment and is currently retired. But in 1992, he made an astonishing $1 billion in a single trade. The bet? Against the British pound. You see, Soros saw that the British pound was not strong enough to withstand the ERM, or the exchange rate mechanism of the EU. As it was being introduced, he shorted the pound, saying it would depreciate. And he was right. The $10 billion position he made proved successful, and he earned $1 billion in a single day. Number 5. Louise Bacon. Now, even though Soros earned $1 billion, his return was still only 10%. That's not bad, but imagine how he would have made had he invested like Louis Bacon. This man managed to achieve a single-day return of 86%. Just as the Iraqi tanks were rolling across the border, he already built his position. He shorted stocks and went long on oil. As international relations escalated, his relatively new fund did the same. At the end of the year, More Capital Management LLC achieved an 86% return. Official numbers were never released, but it's believed that the fund had $100 million under management before the giant spike in ROI. Number 4. Stanley Druckenmiller. Stanley Druckenmiller was building a name for himself as a trader since 1977. In 1988, George Soros noticed his talent and invited him to Quantum Group. At the time, the market believed that the reunification of East and West Germany would bring nothing but a bad fortune for the Deutschmark. Druckenmiller disagreed. He saw the potential for the Deutschmark rising in value, so he placed his bet. The result? A 60% return. But while Soros was battling the Bank of England, Druckenmiller made another trade and earned a total of $1 billion in both trades. Number 3. Kyle Bass. Michael Burry did well, but Kyle Bass bet against the global economy in 2008 and won. While attending a wedding in Spain, he talked to an investment banker from NYC about the subprime CDO market. He instantly realized that this might be a bubble. He hired a team of investigators and realized that residential mortgage-backed securities were high risk, and it was only a matter of time before they defaulted. Buying CDSs and betting against the global economy, Kyle Bass managed to earn himself and his investors between $3 and $4 billion. Number 2. John Paulson. He started his hedge fund, Paulson & Co., with only $2 million in 1994. In 2007, he was the real winner of the financial crisis that ensued. He saw the bubble and managed to get a lot of investors to back him up with $150 million. He took the money and bought a giant heap of credit default swaps, insurance against debt, thinking that the market would never crumble. But that's what Paulson wanted. As the bottom fell off in 2008, Paulson raked in $20 billion for Paulson & Co. Number 1. David Tepper. Just as everyone was thinking the financial system is done for in 2009, David Tepper didn't share the popular opinion. He knew that the government would bail out the banks thanks to the Financial Stability Plan. So he took all of the money he had in his fund and started buying grossly undervalued stocks. He bought Bank of America for 12 cents to the dollar, Citigroup for 19 cents to the dollar, and AIG Securities for 9 cents to the dollar. Then he waited and amassed about $7 billion. On a related note, who do you think is the greatest trader or investor of all time? You can tell us in the comment section below. If you'd like more videos like these, don't forget to subscribe to our channel and hit the bell icon so you never miss any of them. And as always, thanks for watching, guys.